Have you ever imagined seeing your product on a shelf, somewhere on the other side of the world? You know, that dream of taking your business global is a really powerful one. But there's usually one big question that stops people in their tracks. How on earth do I actually finance it? Well, in this explainer, we're going to demystify the incredible financial support system that exists right here in India. It's a system designed specifically to turn that global dream into a reality. So, are you ready? Is your business ready to take on the world? The opportunity out there is just massive. But here's the thing. Success in international trade isn't just about having a great product. It's about learning to play a whole new financial ballgame. Let's break down what makes it so different. You know, a lot of people think exporting is just about logistics, getting your product from here to there. But honestly, the biggest hurdles are almost always financial. It's a completely different world with its own set of rules, and that's where things can get a little tricky. Just think about it for a second. When you're doing business at home, you know the roads. But with global trade, you're suddenly navigating this complex highway of different currencies, international banking laws, and regulations you've never seen before. One wrong turn can be really costly, which is why getting a handle on this landscape from day one is absolutely crucial. And this brings us to one of the biggest challenges for any exporter: managing your cash flow. Seriously, from the moment you get that order to the day you actually see the money, there are several points where you're going to need capital. Let's walk through that journey. Okay, so this is the exporter's typical cash flow journey. And at each of these 4 moments, there's a potential gap. First, you need money just to buy materials and make your product. Then, you need cash to keep the lights on after you've shipped the goods but before you've been paid. You're also waiting for government benefits to kick in, and to top it all off, you might have to offer credit to your buyer just to be competitive. Every single one of these steps is a potential cash flow crisis without the right support. But here's the really good news. You don't have to figure all this out on your own. India has actually built a very thoughtful and strong support system specifically to help exporters deal with these challenges. It's a framework that's truly designed to help you succeed. This one sentence: this is the philosophy behind India's entire export finance policy. Just let that sink in for a moment. It's a powerful promise that the system is there to back you up. It's built on the belief that if you have a good product and a real order, money should never be the thing that holds you back. So what does that philosophy look like in practice? It looks like a financial framework that's both liberal and well-developed. Now, in simple terms, that just means it's designed to be flexible, easy to access, and comprehensive. It covers every single stage of your export journey. The goal here is to make trade happen, not to put up a bunch of bureaucratic hurdles. So who are the key players that make this whole system work? It's really important to think of them not as these big scary banks, but as your partners. Partners who are invested in seeing you succeed on the global stage. These 4 right here, they are the pillars that hold up India's entire export finance system. Each one has a really unique and vital role to play in your journey. So let's take a quick look at what each of them does. First up, we've got the Exim Bank. You can think of this as the main engine of export finance. Ever since 1982, its mission has been super clear: to finance, facilitate, and promote India's foreign trade. If you're looking at a big project or a major export deal, this is probably your first stop. Next, we have SIDBI. Now, if you run a small or a medium-sized business, this institution is your champion. Its main focus is on helping the SME sector grow, making sure that the smaller players have the financial muscle they need to compete globally and get their export orders out the door. All right, now the Reserve Bank of India, or RBI, plays a totally different but just as important role. Unlike the Exim Bank, or SIDBI, the RBI isn't going to give you a loan directly. Instead, think of it as the referee. It sets the rules for foreign exchange and banking. It creates that stable, predictable environment that makes safe international trade even possible. And finally, there's ECGC. This is your safety net. I mean, what if your buyer overseas just doesn't pay? It's a huge risk. Well, the Export Credit and Guarantee Corporation provides insurance against that exact problem. It gives you the confidence to trade with new partners in new markets without that constant fear of not getting paid. So, what does all this really mean for you? It means you're not out there on your own. There is a powerful ecosystem of partners, from the financiers to the rule makers to the insurers, all in place with one single goal: to help you export with confidence. The path forward is a lot clearer and a lot less risky than you might have thought. So don't let the fear of finance hold your ambition back. The market for what you create is out there, it's waiting, and a powerful support system is right here ready to help you connect with it. The real question for your business isn't can we get the funding anymore? The real question is, how big do we dare to dream?